Let's take a look at your cash flow. If you remember the previous presentations, cash flow is one of a trio of reports that are pretty vital to running your business. And probably out of them all, cash flow is the most important report from a day-to-day perspective. A cash flow statement shows all the cash that comes into your business, and it also shows all the cash that's going out. In other words, it's pretty much like looking at your bank statement. It shows the movements in and the movements out. And basically, you could take your bank statement and group things together to come up with the cash flow statement that I'm about to go over with you. So it mimics your bank movements very, very closely. The sad reality is that most businesses tend to suffer from more cash going out than they have cash coming in. And for that reason, managing your cash is absolutely vital to survival, because no one has an unlimited amount of cash coming into the business in order to meet their debts. You simply cannot continue to borrow and borrow more and more. So you do have to be very strong at cash management. So let's take a look at the example cash flow statement. In this example, we only have one item of cash coming in, and that is the payments that we receive from customers. We have lots of different items of cash going out, and in this example, we're looking at 1 month, and we have supplier payments, we have wages, we have rent, and in fact, we have cash going out, which way exceeds the amount of cash coming in. So that shortfall of cash has to be funded from somewhere. Now, you might have room in your bank overdraft, and it simply is absorbed there. But if you're pushing the limits of your bank borrowings, then you could be in real trouble if you're not aware of what's going to happen in the coming month or 2 or 3 in terms of cash movement. So this is why it's so important to know where you stand with cash and be able to manage it and to know how to manage it. Why does cash not equal profit? And why does profit not equal cash? This is a question that is always being asked. You look at your profit and loss account and you say, okay, I made £3,000 profit this month. So why is that not cash? So what I'm trying to do here is explain to you the things that you need to appreciate to know the difference. So this is our cash flow statement that we saw earlier, and you'll see that we have net cash out of 8,100. This is our income and expenditure account, or our profit and loss account, which is close to the cash flow statement, but it's not the same, because our profit and loss account says we've made a profit of 2,900, yet we're short of cash to the tune of 8,100. And this is where you have to start to understand the reasons for this and what you can do to manage it. So let's start at the top. Your sales income for the month of July is £45,000, but your customers have only paid £25,000. Now, bearing in mind that some of that might be for money that was due from the previous month, then there's a big difference in terms of sales made and cash coming in. So if you give credit to your customers, managing their payment patterns and making sure they pay in time is absolutely vital. Otherwise, you could be facing a huge shortfall in cash. The next item to look at is cost of sales. Now, the cost of making those £45,000 worth of sales was £30,000. But if we match that up to what we paid our suppliers, we've actually only paid them £20,000. Now, that's because of the £30,000, we must have made a number of purchases during the month which have come into the business but have not yet fallen due for payment. Or perhaps we're actually holding back some of the payment to suppliers to help with our cash position. So we can have a difference between the two there. If we look at wages and salaries, the profit and loss account has a cost of £5,000 for wages and salaries, but we've only paid out £4,000 in cash. Generally, the reason for that is that you are required to collect tax on behalf of the government. So while the total cost of your wages and salaries bill is £5,000, you only paid £4,000 out to your employees. The other £1,000 is money that's due to the government. But looking at this example, you haven't paid it yet. That's sitting as money owing. Now, this is often an area where businesses hold back payment when they're finding times are tough. And it is a troublesome area because if this goes on for too long, you suddenly find yourself in a situation where the tax collector is threatening to close your business down in order to collect their money. So this can be a hidden problem for you by simply holding back government taxes, and it can catch you out severely. Looking at the next item on rent, the monthly rent for the premises are £1,500, but the cash going out this month is £4,500. And the reason for that is that the rent is paid every 3 months, and this particular month of July happens to be the month it gets paid. So we have a full 3 months payment going out. Obviously, in the next month, there will be no cash going out for rent, but there will still be a monthly charge in the profit and loss account. And if you look at marketing, where again there's a difference, we've spent £2,500 in marketing, but we've only paid cash out of £1,500. Again, this is money that will be due to suppliers, but hasn't yet been paid. So these are typical reasons why your profit and loss account result does not match the cash. So if you're in the habit of only looking at profit and loss, you can be severely misled in terms of your actual cash position, and this is where your business can run into some serious problems. So you do need to have active cash management. You can see in the previous example how much cash out exceeded cash in, and this money has to come from somewhere. Hopefully you've planned it forward and there's a room in your overdraft or your bank borrowings to accommodate this cash flow, and hopefully next month, if you've projected the figures, it may reverse and you actually have more cash coming in than going out. But this is how cash works. It ebbs and flows, you have peaks and troughs, and you have to be in a position to predict these and be able to manage the resourcing of finance to cover this. It's worth bearing in mind that lack of cash is probably the number one reason for business failure. Businesses that have large order books have gone out of business because they've simply run out of cash, and no one is prepared to advance them anymore. So having lots of business does not mean your business will survive. Having plenty of cash virtually guarantees that your business will survive. During the management coaching programme, we will be looking in more detail at active cash management and how you can manage your cash more effectively and avoid, if at all possible, finding yourself in these difficult situations. The next step is to look at the final report in the trio, which is the balance sheet, and we can move on to that whenever you're ready.